Good morning, future millionaires, and welcome to episode 3 in an 8-part series of the Get Rich Slow podcast. I am your host today, Rob Delavan. Adrian Shermer is in sunny Hawaii this week, so he will be joining us not for the next couple episodes. And I am joined today by Sue Yort, our guest and tax extraordinaire. And Lance Johnson has a full docket of clients today, so he will be joining us probably for our next couple. But again, this is a third episode in an 8-part series, and the title today is What to Expect in 2022 when it comes to your taxes. So welcome back.
Thanks.
And thanks for being here, Sue. It's you and I.
You bet.
One of the things that we're going to be leaning on we have been in this entire series and will continue is just the success story every year, Sue, your continuing education and tax law changes every year. So thank you for doing that.
You bet.
But yeah, we're going to be leaning heavily on that as well as some other sources. And on upcoming events in the comments down below, we will put a link to our calendar and for all of our local events, webinars, and client appreciation things and so forth. So, and there's also links to our websites where you'll be able to find that stuff. So in the episode ahead, so we're going to be just picking Sue's brain a little bit more with Sue with ROA Tax, and she's going to be teaching us what to expect for 2022. When it comes to your taxes. Again, third in an 8-part series. And on our last episode, we learned how to keep our 2021 tax filings simple.
Yes.
So intro for you, Sue. We appreciate you being here and always love having you with us. And Sue is, as you guys all know, my trusted CPA and business partner. And I'm going to jump right into question number 1. So based on your continuing education, Sue, what changes are coming down the pike for 2022?
Okay. So thinking about that right now, I'm in the midst of doing 2021 taxes. What we're talking about today is looking forward. And what are the possibilities? So here's the issue is that, as you know, from following, if you're following any sort of news on the government, they kind of got stalled. The Build Back Better bill was supposed to have all the new tax changes. And after they got through approving the transportation bill, the one with all those.
Right, infrastructure too, I think it was.
There you go,
yeah.
Infrastructure bill that had, I don't know, over $1 trillion of money that needed to be spent. Now they need to pass this Build Back Better to increase the taxes so that they can pay for it. However, it got stalled. So that it hasn't been passed yet, and here we are already in 2022. They've looked at a couple things like, dividing it into 3 parts because there's some things that they're not liking, because it's not just taxes in that Build Back Better, it's other stuff. So, however, with all that said, I just wanted to tell you, there is things that are being looked at that they've talked about several times. We talked in continuing education about how they'd had various revisions up through the end of the year and which things stayed through all those revisions. And those are the ones they're thinking are going to go through. So tax rate increases are looking like that's going to go through. Okay. So right now, the highest level is 37%, and it's looking at going up to 39.6% for, and that's people over 500,000-600,000. So we're not talking about, your average middle class family, but that's where they're looking in all of these bills to get the money. is from millionaires, multimillionaires is really what they're talking about. They're saying that with the increases in some of these things, that they're looking at multimillionaires paying on top of money. There has even been talk of taxing assets of multimillionaires. I mean, again, we're not talking about you and I and our 401k accounts. They're talking about assets, 10 million and above. I mean,
okay.
it's, yeah. So I'm not going to be able to give you every detail, but those are some of the things that's being talked about. Okay.
Well, and what's fun about this is, well, fun or not, I guess depends on how you look at it, is it's almost a political conversation
Oh, yes.
of what's going on in Washington, D.C. versus what's, how it affects, the vast majority of your clients.
Yes.
Is, typically middle class business owners who are trying to be smart with their taxes, by working with the CPA. But it's probably worth mentioning here that in no way, shape, or form are we endorsing, like one political position or another.
Absolutely not.
We're literally trying to just share this knowledge of what is likely to happen or not likely to happen. And frankly, based on kind of the political winds changing, sometimes daily, we could be totally, oh, this is going to happen, this, and then the next day it could be something completely different. But I guess the point of it is you're aware of it, obviously, because you do this every day and you're on it just on behalf as an advocate for the clients that you're serving.
Yes. And so a couple things that I would say is I'm 99% positive that if they pass something before June 30th, oh, for heaven's sakes, it could be after that, it's going to be retroactive. So it's going to affect the whole year. But then on the other side of the coin, to reiterate what I said earlier, it is primarily affecting people with on their tax return, they have income over 400,000 if they're an individual, or 450,000 if they're married. Now, that does affect some of my clients, but like I said, the majority of things are going after multi-millionaires. Right. So we're not talking about should I fund an IRA, or something like that. We're talking about, okay, be ready, because things are coming if you have a lot of money. But there you go.
Okay. Well, that's good to know. Okay. So question number 2 for you today, Sue. There's been a lot of talk about there being changes to capital gains. At this point, is that expected to happen? What can we expect for 2022? Speak to that.
Okay. So as I mentioned in a previous question, that the tax changes are going after people with large amounts of money. So like I said, maybe they've got a tax return with adjusted gross over 400,000 as single and 450,000 as a married couple. So the capital gains rates now are 0 if you're under the 12% and under. There's 0 capital gains tax. 15% if you get up to the 22% bracket, and once you're over that 400,000, it's been 20%. Okay, and still is right now. What they're talking about is raising at the highest level. So we're talking again closer to 600,000. That they're going to go with 25%. Capital gains rate. It's a possibility. And then because of the fact that when you have income that high, there's this net investment tax, sometimes called the NIT tax. That tax is 3.8% on investment income for people who have those high amounts of adjusted gross, 600 and over. So if you add 25% plus the 3.8 NIT tax, the effective rate is 28.8%.
Oh, wow. Okay.
So they're kind of talking along those lines. So it's a definite possibility. Again, my average client, your middle class taxpayers, I mean, you can still make 200,000-300,000. This is not going to affect you. You're going to be those 15 or 20% tax rates. It's just when you've got the higher levels and you've got a good investment income, hey, I think it's going to go up.
And is that follow up to that? Is that like taking into consideration the long term versus the short term?
Those are the long-term rates.
Those are the
I
long-term
apologize.
rates. Right. Okay.
So I'm talking all long-term here.
Okay.
Short-term capital gains. So anything that is held under 1 year. Okay.
Right.
A year, a year or less.
Right.
A year and a day is long-term. Okay.
Okay.
Short-term capital gains are considered ordinary income and they're at your ordinary tax rate. Okay. So I apologize, not upfront, but long-term capital rates is what I'm talking about.
And we'll put some definitions of that with references in our show notes. So that the long-term capital gains rate versus short-term capital gains rates, just so that, if the audience needs that, they can look at it.
There you go.
Okay. So next question for you, Sue, is have income brackets changed? And I think you were sharing with us a CNBC.com article that we'll put into the show notes. But there are some pieces to that to explore here.
Yes. So the federal income tax brackets going up has been one of the consistent things that we think is going to happen. And that's going to be for the highest bracket. So right now with the 2021 taxes, we're looking at the highest bracket being 37%. And that's 400,000 and over, but it's going to move up to 39.6%. And I don't know every bracket off the top of my head, but I do know that, the other brackets are going to stay about the same, 10, 12, 22, 24, 28, something like that. But it's that highest bracket. They're going to go a little higher if you're looking at 500,000, plus. That type of thing as your adjusted gross income.
And when you're saying, like the 4, 5, 600,000, this is I think you're purposefully being kind of a range there, or you're utilizing a range because none of this is settled, right? I mean, that's
not set in stone. That's been the problem. Back to that Build Back Better bill that contains all the tax increases. Hasn't been able to get through Congress. Some other things came up, with COVID and, some political things where it's got stalled.
You're right.
And they're trying to get it through. But because of that, there may be adjustments and compromises. And so it sounds like the rates are going up for that highest bracket. But all the details haven't come through yet.
So don't hold your breath.
There you go.
So then I believe the second point of the 3 things needed to know by that CNBC article was talking about standard deductions, correct?
Yes. So standard deduction has, since they did away with exemptions back in the 2018 bill, the standard deduction has been increasing. The statistic we heard in our class was 90% of taxpayers don't even itemize anymore, at least on federal. In Oregon, you can still itemize. So keep holding on to those receipts and contributions. But standard deduction going from this year doing the 2021 taxes, it's 20 for a married couple, it's 25,100, but it's going to jump $800 and be 25,900 for a married couple in 2022.
It's very generous of them. $800.
Yes.
Oh boy.
Yes, it is. So and the single is half of that. So 12,950.
So I don't want to be too, tongue-in-cheek sarcastic on this, but maybe I just will. Really $800? Like What, like, is the concept there? Is it just kind of an inflationary adjustment, or are they
Yes,
actually trying
and
to
they've
move the
increased
needle?
every year since they started. Okay,
Okay.
so when they started with the 2018, it was 24,200. So
Okay.
they've had increases every
Okay.
year and standard deduction.
So
Yes,
I
yes,
should,
yes.
slightly sarcastically say, thank you. You're keeping pace with inflation, but it's not
Yes.
something that's going to move the needle where we're going to go from 25 to 30 to 35 or 40 at any
No,
point.
no, no, no. It's
Right.
just the annual, okay, we're
Got it.
increasing.
Okay.
They did do a little extra with this 2021 I'm still working on is
Okay.
even if, and we've gone over this, they increased child tax credits for a year. They increased
Mm-hmm.
child dependent care for a year. And they've allowed people, if you do cash contributions,
Mm-hmm.
then in addition to standard deduction, the IRS is giving an extra 300 per person contribution
Okay.
deduction, as long as you did cash contributions up to 600 for a married couple,
Gotcha.
and for singles 300.
Okay.
So they're trying.
Okay. Okay. Hey, won't be, I got to keep a positive attitude, right? You can
No
help, you
haters
can help
here
me with
on the
that. So,
podcast. Yeah, we're all about getting the wealth. Yeah.
exactly. So that does the third point on that CNBC article. There's also changes to the AMT, estate tax exemption, earned income tax credit, flexible spending account limits, among others. And we will, just before I forget, put some the definitions of those with references in our show notes for this one. But do you want to, the AMT?
Yeah, I'll
do
give
you want to
you
run
kind
down a
of
few of those?
Yes, sorry to interrupt.
Sure.
I'll give you a brief, overview.
Okay.
Alternative minimum tax, and that's like the hardest to explain, but most people know it as AMT, and
Right.
it's like this whole separate tax bracket. And prior to 2018, there was a lot of people that fell into AMT, and when they went to this higher standard deduction, it's almost gone for
Okay.
most people, because it had, anyway, too much to go into. But yeah, they've talked about some other things with these new changes, possibly the estate tax exemption, which is 11 million now, could drop to 3 to 5 million for the IRS, not
federal,
state.
right?
Earned income credit, they changed for at least the 2021 tax year, and it's a little higher, especially for people without children. People with children were getting it regularly, but they've even done away with age, because it started at 25 and went to 65. Now they've expanded, so more people could get it. And flexible spending limits, those are with your healthcare stuff that you opt into. They've allowed you to not have to spend the whole 2,500 in a year. They've given you a little over slop into the next year, which is nice for most people. So those are a few things that I know about it.
Okay. I love that. So final thoughts on this, Sue, looking forward to 2022. Can you sum it up in 15 seconds or less?
Yes. If you make over 500,000, you could have some increases, and under that, you're going to be fine.
Okay. I like it. Yeah, look out, or you're good. Thank you so much for being here, Sue. We just love you adding value to our listeners. The best way to find Sue is to visit her at her website, www.roi-tax.com. That will be linked in the show notes. And please stay tuned for our next episode in this 8-part series with Sue. The next episode will be learning the basics of small business taxes. So fun stuff, right, Sue?
Yep, you bet.
Okay. That'll be it for today. I hope you guys enjoyed it. I hope you guys can take a little bit away from this to help you get rich slow, and to really tackle the becoming a millionaire by being brilliant at the basics. Thanks, Sue. Love it. Thank you, audience. We'll see you on the flip side.